Hello, friends. Why does an iPhone cost significantly more than a glass of clean water? Why does a wooden table or furniture cost more than the wood it was made of? Because there is work expended in producing the boards plus work in making the product itself in the form of furniture. All these examples reflect the so-called labor theory of value. This is the main theory that has been used since the 19th century. That is, the price, according to this theory, depends only on the labor expended. Logical? No, in fact, it is not logical, it is wrong. Why, for example, is an iPhone phone significantly more expensive than a Chinese Xiaomi phone, although the physical labor expended to make both products was approximately the same? In order to forge a famous painting, you need to put in a lot of effort, but a fake will always cost less than the original. 20-year-old model Sophie Rain earns $43 million a year on OnlyFans. She does not physically work as hard as, for example, a miner, builder or doctor, but she gets paid significantly more. Work in a coal mine costs less than the same work in gold mining. Thus, we conclude, the price and value of any product or service for a person does not always depend only on the labor invested. The price for which you buy an iPhone smartphone in the city and on a desert island will be very different. The history of the siege of Leningrad, for example, knows of cases when gold jewelry, diamonds were exchanged for a piece of ordinary bread. A glass of water in your kitchen or in the desert, what will it cost? The truth is that if you haven't drunk water for several days in the desert, you will give up all your smartphones and all the jewelry you have for a glass of water. Conclusion: value is always subjective. It depends not so much on the quality characteristics of the product or the labor invested, but on the needs of a specific subject, the consumer of this product or service. The value of even an inexpensive item, but given to you by a close and dear person, can be much higher for you personally than for all other people. When your grandmother, having grown a sack of potatoes in her garden, presents this sack to you from the bottom of her heart. But you grimace, because for you, a city dweller, a sack of potatoes does not represent much value. If you want, you can easily buy this sack of potatoes relatively inexpensively in any supermarket. You and your granny will never understand each other. Because ideologically, in terms of value, you are at different poles. Because she lives by the principles of the labor theory of the 19th century, and you rely on the modern theory of subjective value. For your grandmother, a sack of potatoes is of great value because she put a lot of her own work into it. But for you, it's just the whims of your elderly relative. So, value is always subjective because it is determined not by the work put in, but by the needs of a specific consumer, a specific person. Let's go further. Tell me, are human needs constant, static? Answer: no, they are not constant and change over time. Imagine that for some unavoidable reason you haven't eaten for 2 days and you are shown a sandwich with sausage. You are hungry and eat this sandwich with pleasure. The benefit to your body from this first sandwich will be enormous because you are hungry. The body requires replenishing its energy and plastic functions. You eat the first sandwich, the benefit is very great. You are given a second sandwich, you also eat it. It also flies in perfectly, it is delicious and it helps to satisfy your hunger. The third sandwich, some satiety occurs. The fourth sandwich will most likely be unnecessary, but you still somehow stuff it in. And the fifth sandwich will most likely not fit, it will only harm the body. Thus, the usefulness of the first sandwich is huge, the usefulness of the fifth is zero, you practically do not need it, you can throw it away. And the usefulness of the consumed units of goods or services gradually decreases. In this case, the marginal utility was already achieved on the third or fourth sandwich. That's it, then the benefit ends and only harm begins. Or you are in the desert and you are given a glass of water. Oh, how greedily you drink it, how good you will feel. The second glass also flew in pretty good. The third glass, you are already drunk. The fourth glass of water is unnecessary, but you can drink it just in case. And this is the marginal utility. And the fifth glass is no longer necessary, you can pour it into the sand or just wash your hands in this water. And if you are not in the desert, but in your kitchen, you are not thirsty and you drink the first glass, the maximum utility is reached after the first glass. And the second, third glasses are no longer needed for you. Because there is no need, you are not ready to buy them. With these simple examples, I show you how the principles of the modern economic theory of needs work. Marginal utility is not a static value and is constantly changing. The more units of a good or service you consume, the less value they have for you. Needs are in turn divided into first-level needs, second-level needs, and so on. Eating, drinking, having a place to live, keeping warm, moving around, these are examples of first-level needs. To satisfy them, there are first-level goods, food, water, a house or apartment, a heater, a car. These are the industries in which people's needs are relatively constant. And those industries in which you can constantly invest, in real estate, in agricultural production, in energy, in the extraction of minerals. These are the largest industries. But, for example, investments in some turquoise companies, computer technologies that are based on the needs of the second, third levels, these are already risky investments, because the higher the level of human needs, the more dynamically they can change, the higher the volatility, price jumps. Simply put, people will give up a smartphone easier than bread, water or heat in their home. On the other hand, competition in the production of products to meet basic needs is higher, the markets are already saturated. The level of constancy of needs is different. If we look at the index of the largest companies, for example, companies from the S&P 500 index, then on average the period of presence of a company in this index is 20 to 30 years, no more. And then the company safely flies out of the index. For example, the Kodak company was once successful, which concentrated on the production of film and film cameras. But progress did not stand still and they missed their chance to rebuild, they lost their business. Others took their place. This is the principle of competition in the capitalist system, when there is an endless competition, including for the satisfaction of consumer needs. If, for example, you want to open your own printing house for printing newspapers today, then with a high degree of probability you will go bankrupt, because people gradually lose the need to read newspapers and books. Just like the Kodak company went bankrupt because it did not track the need for digital photos and internet technologies. Or another example, the need for shopping centers. For many years, it was profitable to build large shopping centers, people bought everything in person at the store, but the needs gradually changed and today the main share of the market is taken by online stores, marketplaces, delivery services. There is a need for warehouses, not stores. For example, Amazon. The needs of the first level have changed and those who managed to understand this, track it, they turned out to be winners, and those who invested in huge retail space, centers, rather ended up behind. Let's move on. In order to successfully analyze the state of the economy and demand, to study needs, it is necessary to analyze cause and effect relationships in people's behavior. The so-called causal analysis. The temperature has dropped, this means that people will buy more heaters. The temperature has risen, they will buy fans and air conditioners. But some 100 to 200 years ago, there was a different approach to economics. They tried to explain everything with simple formulas and simple interactions. The first person who paid attention to what I was talking about, to the causal theory in economics, was the Austrian economist Karl Menger. He was the first to explain consumer behavior, linking economics with psychology. The price is formed not from above, but from below, from our individual needs and desire to exchange. We exchange one product or service for another only when we think that we will receive more benefit from what we have acquired than from what we are giving away. Let's imagine that one hypothetical person has a lot of oranges, and the second has a lot of apples. The first has already eaten his fill of oranges, and doesn't want any more. Such a person has a low marginal utility indicator, and the second has eaten his fill of apples, but he would gladly exchange some of his apples for oranges. The one who gives away his oranges and receives apples in return subjectively values the apple higher, because he hasn't had his fill of them yet. And the one who receives oranges and gives away apples, on the contrary, values oranges higher. But the subjective price assessment, marginal valuation, of these two subjects is different, but at some price level the people will agree and a deal will take place. A deal always happens at the moment when it seems to both that they have made no mistake, that it is profitable for them. Notice, when someone buys this or that stock, this or that asset on the stock exchange, then at the same moment, someone is happy to get rid of this asset and also considers it profitable for themselves. Let's take apple sellers at the market. Somewhere in their minds, they have a minimum price for which they are ready to sell their goods. Below this price, let them rot, it's a pity for their work. But the buyer also has a maximum amount in his head, which he is ready to pay to eat apples. And at the intersection of these numbers, these values, the market price is formed and the deal takes place. You are walking down the street, it's hot and you want ice cream. For the first ice cream, you are ready to pay $3, because it is very desirable for you, you have a high subjective marginal utility. For the second ice cream you are ready to pay $1, and for the third ice cream the marginal utility will be so low that you don't need it for free, you won't buy it for 50 cents either. You buy real estate, you liked one apartment and you really need it at the moment. But the seller has set too high a price because he is in no hurry to sell his apartment, he needs money less than you need his product. He is in no hurry and will simply rent out his apartment for now. Another situation, if the seller urgently needs to sell the apartment because he is moving to another city. Then he will be ready to sell you even slightly below the market value, with a discount, because he urgently needs money, he has little time, his marginal utility is much lower than the buyer's. If you sell water in a hot desert, then thirsty people will be ready to pay any amount of money for a glass of water, and under a monopoly you will be able to set the highest price. But if the moral component is also included in the price determination, how can you let people die in the desert and not give them water if they don't have enough money for it? It's like taxi drivers raise the price of their services if it starts raining outside. The assessment can also be influenced by personal hostility between the buyer and the seller, as well as many other subjective factors. For example, the seller can say, "I won't sell to you specifically. To anyone, but not to you." These are such simple examples, friends. I hope that how the market economy, capitalism, and how the price is formed is becoming clearer. Subscribe to this channel. Thank you for your attention and see you soon.